Intel, your favorite semiconductor company, just released some interesting news that they are reducing their dividend. On today's episode, I want to take a closer look at that, but I also want to take a closer look at some other updates happening within this company. So let's get started. So as I am recording today's episode, we can see Intel is down over 1%. Some of its peers, Advanced Micro Device, AMD is up roughly 0.63%, NVIDIA is up roughly 0.93%. The biggest news right now, in my opinion, is Intel slashes their dividend by over 65% to 12.5 cents. And I do believe many investors were expecting this. That's why the stock price hasn't really dropped too much. I think this is something many of us were expecting. Let me know in the comments below. Is this a shock for you, or is this something that you thought was going to happen? In my opinion, the real shock factor was that they didn't completely reduce dividend. I thought they were going to reduce it by 100%, but I guess they want to still be a little bit of a dividend and return and shareholder returner one way or another. So again, the thing I'm more shocked about is that it didn't go to zero instead of dropping only 65%. So if we take a closer look today on February 22nd of 2023, Intel announced that its board of directors had reset its dividend policy, reducing that quarterly dividend to 12.5 cents. Intel also reaffirmed its first quarter 2023 business outlook provided at its most recent earnings call, including revenue of between $10.5 and $11.5 billion. For those that don't remember, let's take a closer look back. That would represent a 40% year-over-year decrease for Intel. So things are still looking pretty bad. In my opinion, I wonder if investors aren't upset of the dividend cut. I wonder if they are upset that, hey, they might have been hoping that the semiconductor market, at least for Intel, even though they got it for such a weak quarter, maybe it was growing a little bit over the past few months, and maybe they might have beaten or increased it or increased the outlook. But it seems that's not the case, and things are still looking kind of bad, in my opinion, for Intel. So if we take a closer look at the presentation, Intel believes that the decision to decrease the quarter dividend reflects the board's deliberate approach to capital allocation, and it's designed to best position the company to create long-term value. And again, I do believe this was a smart move because Intel is trying to do so much at once, right? What are they trying to do? First, they're trying to improve or expand that manufacturing, that Intel Foundry service. That takes a lot of money. So they're doing that first. Second, they're also really entering into the discrete graphics market for both data center and the consumer space. They need money to invest in that. And again, that's another thing. But then they also have where they need to continue to innovate in their data center and consumer client CPU processors because they're getting their butts kicked at the moment from AMD. So we can see here that Intel, in the next few years, they're expected to release Meteor Lake in the second half of 2023, Lunar Lake in the 2024. In the data center side, they have Emerald Rapids in the second half of 2023, Granite and Sierra in 2024, and they are also increasing that process and manufacturing with 5 nodes in 4 years. So Intel, in my opinion, is doing so much at once that they need that money to go into this growth mode that they're really pushing at the moment. And Intel believes that right now they are delivering roughly $3 billion in cost savings in 2023. Unfortunately, that also ended up happening with some reduced headcount. They also reduced the 401ks on their employees and compensation on even executives. So they are taking some dramatic approach at the moment, and they believe they are on path between an 8 billion to 10 billion in annual savings by the end of 2025. And again, if we take a closer look, we can see Intel's free cash flow in the most recent quarter was roughly $2 billion. But in the previous 2 quarters, it was negative. So Intel has to fix that, especially with everything that they are investing in. That total dividends paid was roughly $1.5 billion this quarter. So 65% savings, that would at least save this company in dividends alone, roughly $800 to maybe $850 million per quarter, and that can definitely be used to all the other adventures that this company is doing in that growth phase. I do believe, though, some things happened to Intel in the past few quarters that they wish hadn't, and that's what's really forcing this. But first, I do want to remind you guys, NVIDIA is doing their earnings today, and I will be doing a live stream on my semiconductor channel. The link should be above. Nick Rossalillo is joining me, and we'll be doing a live stream on earnings, so make sure to subscribe to that channel as well. Before we go any further, I want to thank you for watching, and I need your help to reach my goal of 30,000 subscribers by the end of the year. So if you can do me a favor, hit that subscribe button and thumbs up. Also, if you want some fantastic insight into the semiconductor industry, join my other channel, Semiconductor Investing and More, where I use my electrical engineering background to break down the semiconductor market. Finally, I want to thank the Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for their subscription service. Now, let's continue with today's episode. So now I mentioned that Intel was probably expecting something else before they reduced their dividend. And I do believe they were expecting two things have really happened. First, Intel was hoping, I do believe they were really hoping that the consumer market would pick up a little bit earlier than they anticipated, right? They had already given us a bad outlook for quarter one. They were probably hoping, hey, maybe things can turn around a little bit faster. If they do, maybe we don't have to reduce dividends as much. The second thing I do believe is Intel's foundry business is a lot more expensive than they initially thought, even with all the subsidies they're getting around in the world. For example, we can see this report that on early February, Intel wants another 3.2 billion euros from German government for their factory that they are planning on building there. So it seems like electricity and heat aren't the only things getting more expensive. We are seeing kind of inflation affecting everything probably in the manufacturing side of constructing these big plants that Intel needs more money. I do believe that government money, while it might be there for Intel here in the United States and all over Europe, it's coming to Intel at a slower rate than they would have hoped for. So because one, the consumer market might not be growing as fast as they hoped. Second, maybe because the subsidies might not be enough that they need. Now with those two put together, Intel says, hey, the only thing we can do from now is reduce that dividend to kind of help offset some of the stuff that maybe we were hoping would kind of shift before we got to this stage. Again, I think it's a great move. I do believe, like I mentioned, my biggest shock phase here was that it wasn't 100% lost in dividend. Before I end this episode, I do want to mention that Intel also had another update. We did see earlier this week or earlier last week, I forget, that DigiTimes reported that Intel is delaying their orders for 3nm tiles with foundry TSMC until the fourth quarter of 2024. I do believe this has to do with Intel not wanting to delay their products. So if we take a closer look, Intel has a product that they were supposed to release in the second half of 2023, Emerald Rapids. Emerald Rapids was supposed to be tied up with a portion of this 3nm tile. Unfortunately, I believe what's happening is Intel's probably doing too much at once, that one of those products, maybe that 3nm tile, is not going to meet what they need to release Emerald Rapids on time. So instead of them delaying this product, they will release Emerald Rapids maybe with another solution, and they found another solution to go with it where they can still release this on time. Then this 3nm tile that they are working with will most likely be released with their Granite or Sierra. So I believe at the end of the day, Intel is just worried that, hey, all this is happening. The last thing we need to do is delay a product. And instead of delaying a product, let's maybe release and let's release everything on schedule, and let's just even though it might not be the best product, it at least might stop the bleeding from AMD. Because the worst thing they can do, in my opinion, is completely delay that product, because then AMD will be able to eat all the market share that they want. Again, Intel, a lot of risk in my opinion. I do believe at least this dividend push was a good move. I hope you guys enjoyed today's episode. Make sure to subscribe because it does help out the channel. Take care, have a good day, and see you next time.